So why do stocks go up? If we're traders, we really should understand why, and you might be surprised at the answer. I'll give you that, plus my regular weekly market analysis so we can figure out where the market is likely to go in the near term. And we'll do a market scan in search of opportunity and look at the day trade of the week on IMGN. So why do stocks go up? In the long run, they go up because the business is improving its ability to make money. And that's simple, long-term, fundamental valuation. However, in the short term, we see a lot of stocks that really don't have great fundamentals also go up. We can think of the stocks of the Reddit rally in the past few weeks, the GameStop, AMC, Dillard's, Bed Bath & Beyond. There's many of them. Then we had a whole bunch of silver stocks that went up. In the last week, we had cannabis stocks make big jumps and then fall sharply. So why is it that those stocks could go up even though they have poor fundamentals? Well, the answer is in the timing. These were stocks that made short-term runs. And in the short term, there can be many factors that drive a stock higher. We had things like short squeezes. We have crowds chasing after a stock and really manipulating that stock into moving higher simply by having a lot of demand for the shares and there not being a lot of supply. Sometimes stocks just go up because there is optimism in the sector. In other words, one cannabis stock could have great earnings and all of the stocks in the group go up just by association. The point is this: if you don't understand the long-term fundamentals, if you're not into a stock for the long term, if you're just looking to trade it, then forget about fundamentals. Because in the short term, stock can make big moves without good fundamentals. What's also important, however, is to not fall in love with the story in the short term. Sometimes these stories sound really great. And given that it's Valentine's Day, my advice to you when you're trading the stock market is never fall in love. There are so many lies, so many bad reasons why stocks go up. And sometimes people believe in those things because they see the stock actually going up. So if someone says GameStop is going to go higher because of the short squeeze, and it works that way in the short term, then people buy into that and they stick with the trade even though it then starts to go down. They think there was a legitimate reason for it to go up, not realizing that the reason was actually quite illegitimate. So, Valentine's Day around the corner, don't fall in love with your stocks. Simply trade market activity. We can make money from stocks going higher even if they have bad fundamentals, simply because there are other things driving those share price moves. All right, let's get into this week's regular weekly market analysis and try to figure out what the overall market is likely to do. And we'll start, as we always do, with the US markets and the S&P 500. And you can see that this week was a bit of a rest week. We had great gains here. And then for most of this week, the market went sideways. And this was actually building something called a pennant pattern. Now, typically when you have a pennant, the trend into the pennant is the trend that will come out of the pennant. And right at the end of the day, in the final half an hour or so, the S&P 500 broke out of that pennant. And so that indicates that the market is likely to move higher. Now, there's a bit of a caution there. Notice that the volume was very light. It's a long weekend. The market will be closed on Monday. And so the volume at the end of the day was quite light. So I'm not sure that the message of the market from the end of the day is real valuable. I'd like to see how the market opens Tuesday. However, we do have a break out of that pennant pattern, and that indicates that the market should move up next week. Looking at the long-term trend in the S&P, you can see we've got a nice upward sloping channel, and until we break down from that channel or even the longer-term upward trend line, I'm going to remain a bull on US stocks. The NASDAQ 100, of course, our tech stocks also in an upward trend. This is the daily chart, and you can see that we just sort of gyrate in and out of this upward sloping channel, but as long as the bottoms are rising from left to right, the buyers are in control. And same sort of thing on the small cap sector, the Russell 2000, a little steeper than the NASDAQ stocks, trend going up a little bit quicker. We're kind of at the top of that channel. So we could see some profit taking near term, but unless there's a break of the upward trend line, I'm going to remain bullish and optimistic about the small caps as well. All right, on to the Canadian markets, and here is a chart of the TSX 60, which also broke out of that pennant at the end of the day. A little bit more volume on Friday up until the last part of the day when the volume really dropped off, but still a bullish chart. And what looks particularly bullish is that we now have the breakout through resistance. Now you'll know if you're watching my video every week that when the market rallied into resistance at the start of January, I said we're probably going to go sideways for a little while. And that's exactly what happened. We went sideways for 4 weeks, and now we're breaking out through resistance from what is called a cup and handle pattern. It's kind of a funny shaped cup and handle, but nonetheless, we got stalled at resistance, we broke out, and that indicates that the TSX should continue higher. TSX Venture, which is the microcap stocks in Canada, going a little bit parabolic, and that's a sign that investors getting a bit irrational, and therefore some of the moves in these microcap stocks in Canada probably a little overdone. However, no breakdown, therefore stick with the trend. On to commodities, and gold is pretty boring. You can see it's been drifting lower slowly over the past 6 months or so. Not particularly good in the near term. Longer term, it's still okay. It's still in an upward trend, but barely hanging on to that upward trend. Oil is in a nice upward trend. I'm showing you the daily chart this week, and you can see that it's in a nice upward sloping channel. Continues to move higher. Volume's not all that exciting or strong, and many of the oil stocks aren't really keeping up. I actually think there's a bit of an opportunity there because the market doesn't seem to be buying the energy stocks to keep up with the price of oil. So perhaps we'll see some money start to flow back into those energy names. I know some have moved up nicely, but there's so many that are really lagging, and perhaps they have weak fundamentals. I don't know, but I think there's an opportunity to watch for some moves in the energy names. All right, and finally the fear chart. You can see that fear has dipped to a new low. We had a little spike in fear at the end of January, and that's calmed down again. So investors not too concerned about a major correction. So my ratings then, bullish on both time frames for US and Canadian stocks. Gold, I'm long-term neutral, bearish short-term. And oil, bullish on both time frames, long and short-term. Momentum continues to be strong to the upside. There's lots of action. The greatest challenge is to finding fresh moves where the risk isn't high. So many stocks have made big moves already that chasing them at those lofty levels feels risky. But there is no sign of weakness to cause immediate concern until we start breaking upward trend lines. I remain on the bullish side. Gold is pretty sleepy, but oil continues to trend higher, and as I said, fear is low. All right, let's jump over to the day trade of the day. I always like to teach a little bit about day trading. It's something that we do on Stockscores every day with the active live service that we offer, where you can watch my algorithms run and listen to my commentary. I answer a lot of questions to keep the learning going, something that is available for the active trader members of Stockscores. If you want to learn more about that, take a look at the website. Let's jump into the day trade of the week. And this one met our requirements at, I think, 9:38 or perhaps 9:40 on Friday morning when it made its action candle. And an action candle looks for abnormal price and abnormal volume. We have an algorithm that measures that. We run that algorithm on the entire US stock market in real time to find these things before most other people do. And that's a benefit because if you're most people, you're learning about them too late. We caught this one at $8.74. For every $100 of risk, there was a 370 share purchase based on our risk management formula. That meant a $3,200 position with margin required about $1,078, and it earned a 6.5 times reward for risk ratio. That meant for every $650, for every $100 of risk, There was a $650 profit. That was a 60% return on that 1-day hold day trade. All found with the algorithm on Stockscores Active Live. All right, let's go on to the Stockscores market scan. For the longer term trader, perhaps you're not a day trader, you would like to be holding positioned longer term. And of course, we have tools for that on the Stockscores website. It's called the market scan. And I'm going to run a scan just to show you how it works. We're going to do a market scan for what we call the abnormal break strategy, which looks for stocks making abnormal breaks on the daily time frame. So while we were looking at it on the 2-minute time frame in Active Live, when we are position trading, longer term trading, we look for that on the daily time frame. Now I'm just going to cruise past some of these really cheap ones here, turn those off. Stocks under 10 cents we'll ignore. I mean, we could look at them, but I'm going to do it this way. So normally when I do this scan, I go through using the what's called the gallery viewer, going through 10 slides or 10 charts per page. What we're in right now is called the slideshow viewer, where I can look at one chart per page. Just want to tell you what we're looking for when we look at these charts. We want to see situations like this, where the stock breaks with abnormal volume, abnormal price action after a period of sideways trading. Now this stock made a big move on Friday, but it's not from low volatility. The low volatility started back here. The entry point on this stock was way back in December, and you can see it's done really well since then. But that's what we want to look for. As I go through these charts, I'm looking for the fresh break. This is the buy day. If you do these market scans every day, you're going to find them on the initial move and then enjoy the upward move after that. So let's cycle through these and look at some of these patterns. This is one that started its abnormal activity back here. This is a pullback play. This is a pattern called a falling wedge pattern. And there you have a break from a falling wedge with some pretty good volume. This is a pretty good chart. I prefer to buy them when they just start getting going. This would be a time to maybe add to the position. If you had bought some back here in 32-cent range, you add to the position there. Continuing along, we're not going to go through all of these, but we'll cruise through and I'll stop anytime I see something that's worth considering. Again, what I'm looking for is an abnormal price move from low volatility. Here I've got an abnormal price move with abnormal volume and fairly low volatility. This stock has been moving sideways for many months. The problem is it really closed far from its high. You can see the long tail on that candle. The other issue is that this stock isn't very liquid. You know, here's a $3.50 stock that traded 600,000 times or 600,000 shares. That's not very liquid. So although I think this looks interesting, I don't think it's quite good enough. However, I do like to take a look at the 3-year weekly chart just to get a sense of how it looks there. And there I can see that it basically rallied into the downward trend line. And that's probably why it closed well off of the highs. So I think this is a good chart, not a great chart. I would rate it a 6 out of 10, which means I think it has a 60% chance of moving higher. Now what I'm doing right now, running this market scan and doing a video of it, is something that I do every day for my subscribers to Stockscores alerts. And I send that video out just at the end of the day. If I see a stock that I like, I feature it, and you can see the track record of those picks at tradescores.com, my other website, tradescores.com. You can also subscribe to it there if you would like me to just do these market scans every day to look for those longer term position trades. If you're into short-term day trading, then Active Live is the service. Swing trading, we do an Active Live. For the longer-term position trader, we do that with the Stockscores alerts. And when I see a stock that I like, I actually send out an email alert or a text message to your cell phone so that you can get that as soon as I find it. All right, I'm still cruising through here looking for a decent chart. See how this one yesterday broke with abnormal activity? And you know, it had done it here as well, and then it did it here again from sideways trading. This is a pattern called an ascending triangle. And then today, big jump, 5.5 to 7. It's a big move for one day. And that's what I mean when we say the market activity tells us the story. Here's a pretty good looking one. This is a stock that I actually day traded today in Active Live. It had resistance at $5.50. It had rising bottoms, which is optimism. Volatility is compressing, which is important. And there was not a lot of volatility before the action today. Nice move today, good move to the upside. That's a pretty good looking daily chart. So When we have a good looking daily chart, we want to jump to the 3-year weekly chart to see how that looks. Then I start to think, okay, where is resistance? There's going to be a little bit of resistance in that $6 range. We managed to close above that. Volume isn't real strong this week. It's not bad. I think this looks pretty good to go higher. I would give this a 6.5 out of 10, meaning I think it has a 65% chance of moving higher. Well, I think that's where we'll stop this week's video. Hope that you've enjoyed it. Remember, the market is closed on Monday. If you like the video, please click on the like button, leave a comment. Where do you think the market is going to go next week? Let us know with your comments below. And most importantly, subscribe to the channel. Trade well. We'll see you next week.